Hey guys, this is Stephen Lewis from thehappyprofits.com, where it's the right place to learn how to place the right trade. So we're doing the 25 laws of trading during the 25 days of Christmas, and we're on law 15, know your instrument. Each trading instrument, whether it's stocks, futures, options, cryptocurrencies, or forex pairs, possess its own unique behavior. To consistently lock in profits, you need to become one with the instrument. A lot of people ask me to do options, futures, contracts, and they go, oh, come over here, come over here. And I do very well with what I've done because I've only focused on one thing. So focusing on one thing has helped me just get way, way better. So you're not shocked by anything because you don't know the instrument you're trading. Also, there's a PDT rule. So part of that is, if you're under $25,000, I think the government imposes a rule that you cannot trade more than 3 times a week, which I used to hate, but I like it because I do a lot of private lessons, and when I teach people, I think it's very good, because otherwise it'll just force them to ES futures, which I think you can trade 24/7, and possibly Forex with some different leverage. But at the end of the day, the PDT rule is there for you. So, stocks. So we're going to go over each one of those stocks, come in all shapes and sizes. You got large caps like Apple, Nvidia, small cap like maybe small pharmaceuticals, penny stocks, even sub-penny stocks. But obviously the large caps are traded all the time because people want to own real stock or real companies. So they're always going to have decent liquidity and volume, and so they actually tend to be less volatile. So if you look at a stock like, I don't know, PetSmart or Petco, and then you're looking at Nvidia, you're going to be able to get rid of your shares, but also you're going to see a more predictable pattern. It might cost you a little bit more, and maybe that's where people go to options version of that so they can leverage their time and money in there. But, they offer a lot of plenty opportunities, in the forms of big ups and downs and plenty of seconds. But penny stocks can provide with an enormous percentage, but sometimes they are very, very, very volatile, and you might have been snuck up by one. I talked to this Israeli guy in Cabo last week. He was talking about a couple. He was up, or thought he was up 30 to 100 grand twice, and obviously he went to zero, built it up, made 100, zero again, and that's just not him holding it. He doesn't know any laws, so that's part of it, educating yourself with these laws of trading, and then also seeing what they actually mean to your trading. So by them knowing what you're trading, and that's very big. So please don't go in undisciplined. It's very easy to just read a couple books and then maybe ask a couple friends what those actually mean, and that's why we're going over these laws. So the next one is, I'm going to go click through a couple more and make sure we cover all of them. And PDT rule for stocks is just basically says there's margin accounts, and you can only leverage it by 2. But options, let's go to options. So that's where you can start getting expiration date, and you're doing a larger stock, and you're actually buying almost like 100 profit margins of a stock. So it costs a lot less to get in, and the potential is there more because you're leveraging more of your money. So you could buy, 100 shares of a stock at a very low price because you're leveraging the option to sell or buy them later on. So there's definitely options to sit there and not to be confused, just with buying the stock itself. So if you can buy Apple for 200, well, maybe you can buy, a couple options for 200, and you're actually controlling a 100x of the potential of your profit instead of just wasting all your money. And you're not wasting it. It's just you're buying a large cap stock, and that's for more investment opportunities. So the next one is, I'm just going through it. Sorry if I have to look around for my mouse. The next one is futures. So just like that, it almost trades 23 hours a day. And while the other ones only trade during regular market hours. So you definitely have to know the intricacies of each instrument, and that's why it's very rule. And they don't have PDT rules on futures. So that might be a good thing for you if you just think you need to trade more. I would say you need to learn how to trade, and then find the instrument you would like to actually trade for those patterns, because I think eventually you're going to realize it is all pattern recognition after a while. And then you have Forex. Short for foreign exchange, and it's the heavyweight champion of financial markets because it trades trillions every day. So basically, you could trade the euro to USD, or the USD, which is United States dollar, to the Japanese yen. But the cool thing about those is they make predictable moves, but they're more market or fundamental news influenced. So you would definitely want to know that instrument is new and what drives it. And also when the markets change, when one stock exchange is opening and one's closing, there's certain activities that happen there that you better know those patterns or you're going to get it. That's all. So just look at those. Those are very important. And then we have crypto. I haven't got on it. I was supposed to get in Bitcoin at 15,000. We had people going, ooh, in 10 years it's going to be $1 million. And yes, this year since Trump's election really went bonkers, and it's up there. I don't regret because I don't know the instrument itself, so I don't trust it enough. But obviously we're all going digital. I went to an ATM the other day just to get cash out for a purchase of a touchscreen TV for a conference, and realized, yeah, I'm already digital. I just didn't know it, or I didn't think about it that much. So that's like a very big thing. So cryptocurrency is the other one. And then just remember, when you're trying all these instruments, just learn out the peculiarities of it. It's just like learning a new job. You have to go, okay, well, that equals this and this equals that. And if you don't understand those, then you probably don't need to be trading it with real money until you see that. So first, learn the instrument. Then learn the music. Then you forget all the shit and just play. That's Charlie Parker. So hey guys, y'all have a good one. That is the 15th law of trading, which is know your instrument. Thank you.